Okay, next bit, income tax, all about tax. Gross income, money received during the year, including money earned, interest received, dividends from shares, etc. So pretty much money you get from your income before tax. Allowable deductions, necessary work-related expenses, really important, work-related, and money donated to charities. So basically, allowable deductions, you'll take them away, so you obviously hopefully pay less tax to lower your taxable income. And the taxable income is the amount of income that is taxed. So basically your income and a portion of that is taxed. That's your taxable income. The rate of tax varies according to the amount of money earned and is calculated from a tax table. You'll see that on the next slide. And finally, income tax, that's the amount of money paid to the federal government. You might be thinking, what's the point of tax? Well, it pays for things like roads, schools, fire, police, essential services for society. All right, taxable income equals to your gross income, take away your allowable deductions. So things you buy or money to charity that's needed for your job. So write this down. Also, the ATO website, Australian Taxation Office, talks about deductions and what you can claim and things. Now the mathematical part, the tax tables. Now the good news is you will never have to remember this. This is always given to you as part of a question. But of course, you'll need to know how to use it, and that's what this lesson is going to focus on. As you can see, the more you earn, the more tax you pay. In fact, if you earn less than $18,200, you pay no tax at all. You might end up paying tax, but you should get it all back when you do your tax return at the end of the financial year. Now, obviously, what you declare as a allowable deduction is really important. As this cartoon says here, no, you can't claim chocolate as a business expense. Now, back to this. There's essentially two parts. These are the brackets, and this is the actual calculation. So I might just write tax brackets and calculations for each bracket. Calculations for each bracket. So when you do questions on these, step one, always figure out taxable income. Step two, find out what bracket you're in. If someone earns, say, 15 grand, the answer is automatically just nothing because it's less than 18,200. You can see up here, your starting figure is already a lot more than what these guys here are paying. So yeah, the more you earn, the more tax you pay. And then you'll charge for each dollar of a certain amount. But we'll go through that with some examples. Okay, question one. You can also see the table still there. This is always given to you in these sorts of questions. Bonnie earned $35,660 last financial year and has allowable deductions of $727 in work-related expenses and $259 in donations to charities. Part A, calculate her taxable income, and then part B, use this table to figure out how much tax she has to pay. So part A is quite simple, taxable income. That's just going to be her gross income, which is $35,660. Take away the deductions and the charities. And that gives us $34,674. So that is her taxable income. Now we go to part B, the actual tax she has to pay. So tax. Step one, put this figure into this table. Which bracket are we looking at? Of course, we are looking at this bracket right here because this is obviously a bit less than this. So all our calculations are concerned with this part of the table. Essentially, this right here. So we can actually ignore the rest of this. We're just using this bracket of the table. Let's go through it. Now notice the later ones have a starting figure. This one actually has no starting figure. We can actually write it as $0. So I'm going to write 0 plus. Now, 19 cents for each dollar over $18,200. So we want to figure out how far over this we are. So I'm going to take my taxable income and take away $18,200. So plus bracket 34,674, take away 18,200, and we're taxed 19 cents for each dollar. So I'm going to multiply that by just 0.19, because obviously you've got to make cents into dollars. 19 cents is $0.19. Just type that up, and that will be your answer. And that is 3130.06. So that means in this case, Bonnie earning this amount with these deductions ends up paying just over $3,000 in tax. So with these tables, it's essentially the same every time. Just get the correct bracket. Once you know the calculation, apply the calculation to your question, and you want to see how far over each of these figures you are. So take your taxable income minus the last figure, multiply by the rates, and then add on an additional amount. But like I said, this one here, there's nothing here, so it's actually 0 plus the rest. All right, so let's keep going on. Question number 2. Again, the tax table is still there. Linani is an accountant who earns $78,642 one financial year. She also earned $132.51 in interest from her bank savings. Linani has allowable deductions of $287.20 for office supplies and $75.88 in books. Calculate her taxable income, the amount of tax she needs to pay. Now, one just side note for real life, financial year. That does not mean January to December. It actually means July to June. So 1st of July to 30th June. And that's actually a real life thing. So yeah, the financial year is actually separate to a calendar year. So if you ever see on TV like end of year ads in June, that actually means end of financial year ads, not actual end of calendar year ads. Just to make that point clear. Okay, so part A, taxable income. Okay, so she's got her regular amount, so 78,642. But she also earned interest from her bank savings. Now that's an income source, so that's also tax. So we actually must add that, not take it away. You've got to add any income sources and take away deductions. Then we can take away 287.20. We can also take away 75.88. So minus 287.20 minus 75.88. So yeah, so add income, take away deductions. Now work that out. That is 78,411.43. So that is my taxable income, which I'll put into this table in part B. Let's now do part B. So tax. So step 1, figure out which bracket 78,411.43 goes in. So we are looking at this one here, because obviously this is a bit less than $80,000. So my bracket is this one right here. So my calculations are going to be this. So let's start. 3,572. That is my first part. Remember in the first one I put 0 because this one actually has nothing there. Now plus, let's put it in red to make it clear, plus. Now 32.5 cents for each dollar over $37,000. So we need to work out how far over this we are. So I'm going to take my actual income, take away this, then multiply by the rates. So brackets 78,411.43, take away $37,000, then times that by 0.325. Because remember, we're making this into dollars. Now type that up. And don't forget that this plus all of this. And that is 17,030.714 blah, blah, blah. We'll round it to 17,030.71. And that's the tax she has to pay based on this income, and these deductions. So, backtrack. This figure, step 1, find out what bracket it's in, then maybe highlight or box that bracket. Once you know the bracket, our calculation is over here. So we start with 3572, then plus Then take your taxable income, take away this bit over here, then multiply by this right here. And don't forget to make this into dollars. 32.5 cents is $0.325. Okay, question time. Exercise 804, there they are.